All right, guys, listen up. We have three companies to break down in this video, all of which are set to report earnings this week. Actually, one of them, the first one, will break down, set to report earnings today after the bell. So we have a lot to break down in this video: earnings, charts, my thoughts, the stock market. So if y'all find value, hit that like button. Make sure to subscribe, guys. Come on. And don't forget to follow me on X as well at Stas Talk Stocks. Link down below. And with that being said, cheers. I got my water right here, guys. And of course, we got the coffee. Don't forget the coffee. Cheers, guys, and let's dive right into the video. So it's currently about 12:15 on the East Coast when I'm making this video, and we have all the indexes except for the Russell in the green. The Russell's down, let's see, 0.1%, but we have the NASDAQ up 0.5%. Dow's up, let's see, about 0.2%, as we have the S&P 500 up 0.1%, and the VIX up almost 3% so far on the day. And notice here on SPY, before we dive into these three different companies, all of which again are set to report earnings this week, look at SPY here, guys. We hit, even though we're up barely on the day, we hit a fresh high at $461.23 this morning, which you guys probably know we're now officially above excuse me, the highs from back over the summer. Back over the summer, SPY hit about 458, 460, and now again we're breaking out of that point as we're at 461.23, which now means the next main resistance for SPY is the all-time high, which I think is at 478, 479, something like that. Yeah, that's the next main resistance right now. $480-ish, which we hit back in January of 2022. So almost 2 years ago is when we hit that all-time high. So that is the next main target that I have right now on SPY. Will we hit that before the end of the year? That's the million-dollar question, right, guys? Isn't it? I mean, it is. And we have a cup and handle forming here on SPY. So that's a pretty good sign overall for the bulls. And on Triple Q, if I show you this, we have the same thing, cup and handle. Now we're about $14 away from the all-time highs that we hit back in November of 2021, and we're above the highs from back over the summer a couple of months ago. So it looks like Triple Q is well on its way. Same with SPY. And again, the million-dollar question is, will we hit these all-time highs before the end of the year, or is it going to happen early next year? I have no idea, but either way, bulls are in charge. We're ripping day after day, it seems like here. Well, actually, not so much on Triple Q and SPY over the past couple of weeks. I guess you can say we've consolidated over the past 10, 15 days, but overall, in the grand scheme of things, over the past couple of months, we've definitely been ripping, guys. So what do you think? All-time highs before the end of the year? Early next year? What do you guys think? Let me know in the comments down below. And now let's just dive right into these stocks. The first one is Oracle. ORCL is the ticker. This one's set to report earnings today after the bell, so about 4 or 5 hours, from me filming this video. When you're watching it, probably 2-3 hours away. And check out the volatility on Oracle, guys. This stock was at 87 bucks back in March. It ran all the way to 125. Then we actually double topped at about 125, 130. The first top came in the middle of June. Then we hit it again in the middle of September. Sold off down to about 100. Now we're pushing the 1-teen, so we're at 114, 15 right now, up over 1% in anticipation of these earnings. So if I pull up Safari very quickly, guys, give me a second. We'll look at some numbers here regarding Oracle. So Oracle right now is a monstrous company. Let me just tell you that. It's at $300 billion, $314 billion market cap. The beta is right around a 1, so it's pretty much right in line with the overall stock market when it comes to volatility. Their PE in the last 12 months is a 34, so arguably a little high considering their growth, which we're not going to get into in this video too much, but arguably high in my opinion. Forward dividend yield is a 1.4%. Not bad, not too bad there of a dividend yield. And when it comes to their actual earnings for this upcoming quarter, which again, we're getting them, excuse me, this today after the bell. When it comes to their estimates, you guys can see based on 24 analysts, on average, $1.32 is their EPS estimate. The low estimate's $1.31. The high estimate's $1.37. And a year ago, they did $1.21 of EPS. All right, so either way, they're going to be up, whether they do the high, the low, the average, year over year. It's going to be up for the EPS number, which is great. And when it comes to revenue, guys, based on 21 analysts, $13.05 billion of revenue. The low estimate is $12.97 billion, and the high estimate's $13.15 billion. So Oracle, ORCL, is number one for today, and they're set to report earnings today, which is why we talked about them first in this video. Now, the second one that I'm watching very, very closely, guys, is Adobe, ticker symbol ADBE. Let me pull it up and show you guys which. If you've been watching my channel for at least a couple of months now, or at least a year or two, you probably know Adobe is one of those stocks that I wanted to own so freaking bad, and I never really got a chance to build out the position or really even start a position, and now it's ran away from me quite aggressively. We hit 275 back in September of not this year, but last year. So about a month, or a year rather, in a couple of months. So a little over a year ago, we hit that point. And now we're at $630 freaking dollars, guys. We're 70 bucks away from all-time highs. So this is one that I'm not even considering anymore, just due to the valuation, guys. Because listen, when you're buying stocks, you don't want to just buy any old stock at any old price. You have to buy a good company at a very reasonable price, or undervalued. Hopefully as undervalued as you can get it. And for me, Adobe is just not there, man. This thing's almost at all-time highs. It's up, an amazing amount year to date. I mean, it's up like 80% year to date. So for me, when I see that, I'm like, oh, maybe I should wait for the next opportunity. There's no need to FOMO into it and force it. But either way, they're set to report earnings this upcoming week, I believe on the 13th. So 2 days from now, on Wednesday after the bell. So let me actually pull up Safari here and show you guys some numbers around Adobe. So Adobe right now is a $285 billion market cap. It's obviously more volatile than the stock market. So the beta is a 1.34. The PE ratio, guys, trailing 12 months is a freaking 56. I mean, come on, guys, 56 PE, and their growth is not nearly what it was in the past. So for me, just looking at the PE ratio, guys, it's pretty overvalued. Let's be honest. Buying Adobe stock here, you're not going to expect, at least in my opinion, I wouldn't expect a crazy return over the next couple of years. I think a lot of the gain has come already. I could be wrong. I don't know. But I think Adobe is a little bit overvalued. But either way, this is one that I'm watching because, again, earnings are this Wednesday. They're looking to do, on average, based on 26 analysts, $4.14 of EPS. $4.11 is the low estimate. The high estimate is $4.18. And last year they did $3.60 in EPS. And when it comes to revenue, guys, based on 24 analysts, $5.03 billion is the average. The low is $5 billion. The high is $5.43 billion. And the year ago sales were $4.53 billion. So they'll be growing around 11% year over year, which is good, but not good enough to warrant a almost 60 trailing 12-month PE. That is pretty insane in my personal opinion. So that's Adobe, ticker symbol ADBE. And last but not least, guys, we have Costco, ticker symbol COST. And actually, before we break down Costco, don't forget to get your free stocks from Moomoo, guys. Up to 15 stocks, each up to $2,000. Just use that link down below or go to StockStarFest.com/Moomoo. Listen, guys, once you open up your account and fund it with your initial $100 deposit, you get 5 stocks, each up to $2,000. And if you fund your account with at least $1,000 on top of those 5 stocks, you get 10 more stocks, each of those up to $2,000, totaling 15 stocks, each up to $2,000, guys. So get on it. Use that link down below. And with that being said, cheers. Let's continue on here with Costco, which is also pretty overvalued if you ask me. We're at fresh highs on the 4-hour chart. It looks like we're at a 1-year high as well. Maybe a 3-year high. Probably not a 3-year high. Actually, yeah, a 3-year high, guys. Now, as Costco is at an all-time high. Yeah, Costco's at an all-time high literally as of today, guys, heading into these earnings. So that's a big red flag in the very short term, if you ask me. I mean, you know, if I want to buy a stock for the long term, it's at all-time highs heading into earnings. I mean, that's a stock that I typically want to avoid, at least in the short term. You know, I like buying stocks that are on discounts, on sales, and you know, companies like Costco and Adobe, like I said in the last stock, these are always trading at a premium, it seems like, and it's very hard to get them at cheaper valuations. And, you know, it just keeps on going up and away. That doesn't mean it doesn't offer trading opportunities. It sure does offer trading opportunities, but as a long-term buy and hold at these levels, at these prices, not the best, not the best for Costco or Adobe, in my opinion. Oracle's probably the best, but even that one's arguably overvalued as well. All of these are arguably overvalued. So Costco right now is sitting at a whopping, let me show you this, $275 billion market cap. And the funny thing is, guys, all these stocks or these companies are around the same value. I think Adobe was $275 billion as well. Costco's that same market cap. Oracle's $300 billion. They're all in the same ballpark, and they're all frothy, in my opinion. So Costco EPS is, let's see, trailing 12 months, 14.17, which makes their P ratio a 40-freaking-4, guys, a 44 P for Costco. Come on. I mean, come on. That is just ridiculous, guys. Way overvalued, in my opinion. And Costco's looking to do, let's see, EPS on average of 341. Low estimate is 318. High estimate is 367. And a year ago, they did 307 in EPS. And it looks like here for revenue, let's talk about this, guys. Based on the 20 analysts, 57.7 billion. Low estimate was 56.9, and the high estimate was 58.8 billion dollars. And I'm not seeing what they did a year ago here, but either way, guys, I think they're too frothy based on the growth that they're showing. I think the P ratio is way too up there. I don't know. What do you guys think? Let me know down below in the comments. But these are three companies I'm watching very closely this week. We have Costco, Adobe, and again, Oracle. I think Adobe is, Adobe is Wednesday. Oracle's today. Costco's Thursday. Let me double check. Yeah, Costco set to report earnings on Thursday. So let me know your thoughts in the comments. Hit that like button. Make sure to subscribe here on YouTube. Follow me on X at Stocks Talk Stocks, and I'll see you all in the next video.